the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares fell today, even as traders mount cooling trade tensions between the US and China. So if we look at the Straits Times Index, it was down 0.53% at 3,913 points at about 2:45 p.m. Singapore time, with a value turnover of some 726 million Sing dollars in the broader market. But let's take you through the closing numbers right now. The STI, as we shared with you earlier, down 0.37% at the close. We're looking at 3,919 points. In terms of value turnover, that's 1.21 billion Sing dollars. Now, gainers outnumbered losers, 310 versus 183. Top advances for today, we've got for you New Incorporation USD, Venture Core and ASUS, and top decliners, we've got DBS, SGX and ST Engineering. Well, in terms of companies to watch, we have Koh Brothers Eco Engineering, because a JV between Japanese firm Penta-Ocean Construction and a subsidiary of Koh Eco backed there's a close to 1 billion Sing dollar contract for the construction of intra-terminal tunnels at Changi Airport's upcoming Terminal 5. Now, elsewhere from US and China setting up a framework towards a trade pact after 2 days of high-profile talks in London, to Qantas shutting down the operations of Jetstar Asia. We've got more international and corporate headlines in focus. And joining me right here in the studio is Abhilash Narayan, investment strategist at HSBC Global Private Banking and Premier Wealth. Abhilash, welcome.
Thank you for having me.
Great to have you. And let's start with global news this time around, because the US and China, they have de-escalated trade tensions after 2 days of high-profile talks. Both sides said they have reached this preliminary deal on how to implement the consensus they reached in Geneva last month, of course, pending approvals by Xi Jinping and US President Donald Trump. What do you make of the news? How did Asian investors react to them today?
Actually, it's a fairly positive development, right? Because both the top officials from both the countries did express an optimistic tone after 2 days of negotiation, and said that a framework has been agreed to, as you mentioned. Now, while we don't know the full details, markets expect that, it will address issues related to China's exports of rare earths and magnets to US, and US in turn will potentially ease the export controls on China. Overall, we think that the trade talks are a positive for the broader risk sentiment and reinforce our positive view on global equities, US as well as Chinese equities.
I see. And as you mentioned earlier, right, full details of the accord weren't immediately available, but US negotiators say they expect issues surrounding shipments of rare earth and magnets to be resolved with the framework implementation. How far has this bolstered confidence in the global mining industry today? And if I may stretch that question a bit, we're seeing that play out in Europe right now in terms of defense stocks. What do you make of that?
Well, that's a good question. Now, in short, I think it would not have a significant impact on the global mining sector. And that's for two reasons. First, let's start with the rare earths. While those elements are very, very important for some high-tech manufacturing, they're not used in large quantities. I mean, if you look at industry estimates, the total market for rare earths in terms of annual sales is just a few $1 billion, which is just a fraction of the trillions of dollars of commodities traded every year. So we don't think it will have a significant impact on the mining company stocks at a broader level. And secondly, I mean, we all know China is very, very important for mining sector, given that it's the largest consumer of commodities ranging from iron ore, copper, etc. But if you look at the policy priorities of Chinese authorities, they have been focused on boosting consumption rather than construction, and housing sector remains challenged. So we remain, underweight on global materials and mining stocks. Within China, we have a preference for innovation and AI champions and, SOEs which offer attractive dividends.
So would you say that the reaction we saw today with regards to mining stocks or defense counters in Europe, for instance, merely a reaction to the current news and the long-term outlook and the long-term impact remains muted somewhat.
Yes, correct. So, the recent bounce you've seen obviously is driven by sentiment. But if you look at fundamentals, we think that global growth will be slower than what markets were expecting at start of the year because of the trade-related uncertainties. And that will have an impact on the overall demand. So, we think that mining sector will continue to face these headwinds. And that's why we think it makes sense for investors to be underweight mining sector and have greater allocation towards technology, industrials, which are sectors which benefit from clear tailwinds.
I see. Well, going back to the Singapore stock market as usual, Abhilash, just for today, how far did the STI track regional movements? I mean, it was down, regional markets were up. Any surprises when it comes down to the biggest movers and the sectors that they lie in?
Well, yeah, it was a contrarian move, right? Because most of the markets in Asia did edge higher during the day. I think the move we saw today could be explained because of two reasons. One, Singapore is usually viewed as a more defensive market, so we may have seen some rotation away from Singapore into higher beta markets given the broader risk-on sentiment. And secondly, we've seen bond yields globally as well as in Singapore rise a little bit, and that at the margin would have been a drag on Singapore equities. But if we step back and look at the broader picture, if you look at the returns from the STI index in US dollar terms so that we can compare it with other markets, once you include dividends, etc., STI is up 13% in US dollar terms.
Wow.
MSCI Singapore is up around 19%. And it's outperformed, both Asian and global equity markets. Now, we remain overweight on Singapore equities because we think it's a high-quality market. If you look at the banks in the Singapore exchange, they are high-quality banks. They have shown earnings resilience through the recent quarters. And if you look at the real estate sector, it's been one which has been hit by, higher interest rates. But we do expect that over the next 6 to 12 months, interest rates globally as well as in Singapore would come down. And when you combine that with, the strong occupancy we've been seeing in commercial space, we think that REITs could actually be, key beneficiaries and do well over the next 6 to 12 months.
I see. Well, let's zoom in on some of the counters to watch for today, Abhilash. We have Koh Brothers Eco Engineering, because a JV between a Japanese firm Penta-Ocean Construction and a subsidiary of Koh Eco. They backed this close to 1 billion Sing dollars, 999 million Sing dollars contract for the construction of intra-terminal tunnels at Changi Airport's upcoming T5. I know you don't comment on individual companies, but generally speaking, how significant are such contracts for a company the size of Koh Brothers?
Well, I think there are a couple of takeaways for us, right? So, if you go back to February this year when the budget was announced, we saw about $5 billion being allocated to Changi Airport Development Fund. And it was widely assumed that a large portion of that would be allocated to construction of Terminal 5. So, we are seeing progress on that. And I think it's good to see that the government spending on, public infrastructure is actually, benefiting local companies. And it should be accretive to the Singaporean economy over the next, few months and few quarters. And, as I just mentioned, we are positive on Singapore equities, and the latest sort of news is just another reason to be positive on Singaporean companies and Singapore stocks.
Okay. Now, the reason why I'm talking about Koh Brothers, Abhilash, is because it puts us in a good position to talk about Jetstar Asia in just a bit. But I do want to get your take on this. What's your take or your opinion on the state of Singapore's aviation industry, be it, full-cost carrier versus low-cost carrier at this point, if I may?
Well, if I look at the aviation sector overall, I think it's a sector which has a few tailwinds going for it because if you look at aviation sector, one of the key costs for the airlines is energy cost or fuel costs. And we've seen, fuel prices decline or oil prices decline by 10% year to date. Recently, on 31st May, we saw OPEC announcing increase in production to the tune of 411,000 barrels per day. And we do expect, further production increases in August and September. And if that happens, we could see oil prices, declining a bit from where we are today. And all of that adds to the bottom line of airlines. So we think aviation sector in the region in Singapore can continue to do well because costs remain, contained, especially from a fuel angle. And the regional demand that we are seeing is still quite robust. Yeah,
so we talked about robust regional demand. We talked about perhaps the bottom line. We can push down costs slightly further going forward. But at the same time, big news of the day, Australian flag carrier Qantas winding down operations of Jetstar Asia and shutting it down on the 31st of July. So Jetstar Asia said in a statement that the move comes as the low-cost airline faces challenges that threaten the sustainability of its business. So broadly speaking, again, without, looking at Jetstar as a company, how far is this closure specific to the runnings of Jetstar Qantas versus the broader industry trend? I think probably we have the answer already.
Yes, I think, obviously the closure may be due to some company-specific issues, and I don't have the details of how the slots for Jetstar have been reallocated. I think it's fair to assume that those slots would be taken up by other airlines because Singapore remains a fairly busy airport. So actually, Singaporean and other regional airlines could benefit from this additional capacity. Now, overall, as I mentioned, we think that regional demand remains quite strong, and it aligns with one of the priorities we have been highlighting to our investors, that it makes sense to look and to tap into the domestic resilience and the consumption boost that we are seeing in Asian economies. So we like consumer discretionary stocks in Asia, and aviation sector just falls well within that.
I see. And finally, before we let you go, Abhilash, let's talk about electric vehicles, because Tesla is tentatively planning to offer rides on its self-driving robo-taxis to the public starting from the 22nd of June, just about 11 days from now. If the robo-taxis, they're truly launched later this month, no delays or sort of, what would the move mean for the global ride-hailing industry then? Do you expect this to be a game changer?
Well, it's a very exciting development, isn't it? I mean, we've been hearing about robo-taxis.
We've been waiting for so long.
For so long. And obviously, it's been a journey which has been marked by bumps and delays and some safety concerns. But the direction of travel is clear, right? That we will have more automation as far as transport and mobility is concerned. And I think it brings forth an important point that we've been highlighting, that, while we've seen tariffs dominating headlines for the past few months, investors should not lose sight of structural trends and the power of innovation. And we've been saying that areas like AI adoption, autonomous mobility are areas where we'll continue to see structural growth. We think that robo-taxis is just another example of AI actually revolutionizing, business models and improving the customer experience as well as, efficiency. So, from our perspective, we think that the next leg of AI rally will not be driven by chip manufacturers. It will actually be driven by, software companies and companies which actually bring the benefit of AI to consumers. So, autonomous vehicles, robo-taxis is one. But in addition to that, we think that companies which make AI agents, smart robotics, as well as, AI smartphones, all of those could benefit. So while technology and communication sector companies globally, are a favored sector for us, we think that the industrial sector is also something that's going to benefit because you need to manufacture those components, the LiDARs, etc. for robotaxis, as well as, to upgrade the infrastructure globally to make it more digitally enabled. So technology and industrial sector continue to be our favorite sectors from a global perspective.
All right, exciting times indeed, isn't it, Abhilash? Thank you so much for the insights. That was Abhilash Narayan, investment strategist at HSBC Global Private Banking and Premier Wealth. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.